This stock is an expensive high-risk play, but it's on a dip. Is now the time to take the risk and buy? This mysterious company looks to have amazing potential, but its high valuation makes it quite risky. Is it time to buy the dip or stay away forever? What's up, my Milk Money Millionaires? I'm Joshua. Welcome to my channel where we learn to milk our money to make more money. As always, a reminder, I'm not a financial advisor. I'm just here for edutainment, so invest at your own risk and verify with your own research. If I got something wrong, let us know in the comments below, and like and subscribe to help the channel grow. Palantir's hype factor piqued my interest last fall as a possible growth opportunity, and with Peter Thiel and Alex Karp behind the company, it inspired confidence that the hype would be real. But when I realized that 80% of the shares were not allowed to be sold until this week, I decided to wait to get in until after the inevitable lockup dip. FOMO got the best of me, however, as Palantir pumped like crazy over the last month, and I bought 100 shares at about 35 just in case a lockup crash didn't happen. Now, after a profit miss during their earnings call and the lockup period ending, Palantir is taking a huge dump, so is now the time to buy. Well, in general, buying when stocks are on sale is much smarter than buying when they are rallying. But even at this price, Palantir is still a very high risk. But I haven't read anything but insanely positive reviews of the technology and growth prospects going forward. So let's get into the bear case and the bull case and try to decide if this high risk stock could pay off bigly. So, what is Palantir? PayPal co-founder Peter Thiel helped develop anti-fraud technology for PayPal. After 9/11, he used that same technology to help track terrorists, and thus Palantir and its relationship with the government was born. The CIA and the US government has been the main client for much of Palantir's history. The technology is somewhat hard for most people to understand, and as I am not a data scientist or software engineer, I'm not sure if I fully understand it properly either. So if you understand it better than me, or if I got something wrong, then let us know below. But as far as I understand it, Palantir provides customized software as a service solution to help institutions pull together disparate sources of data, and uses AI to help find connections and process that data more efficiently, and it presents that data in a graphical user interface to make it user-friendly. The goal of the software is to help data be utilized to a much greater degree to make better decisions, uncover crime, and enhance efficiency in processes. Some examples are the CIA using it to track terror cell activity and the tracking of illegal ivory trade in Africa. A business case example is the claim that Airbus used Palantir's Foundry to improve the speed of A350 production by 35%. So it sounds to me like this technology could have some insane potential in this data-driven world. But again, I could be bamboozled with the sexy buzzwords of big data, AI, etc., as someone who doesn't live and work in that space. So if it sounds like the future, then what could possibly be the bear case? First off, the creepy factor. George Soros even said he was going to be dumping his position after he realized what the company does. Being a part of the CIA tracking people can really sound worrisome to investors. Since Palantir is so secretive, we don't know if we should really trust them, trust that they are just helping bust the bad guy, or if they are helping the NSA track you and me. Even if they just track terrorists, some people might be uncomfortable knowing that they could be helping drone people. Again, to be fair, they could be 100% ethical, but we just don't know for sure because they're somewhat of a mystery company. The second main bear argument for me is that they are already very highly valued. Seeing a $25 stock doesn't seem too expensive, but that also represents a $50+ billion market cap. More on that valuation later. Even if they are successful, if they grow too slowly, their stock could be stuck in the mud or even dip hard with any setbacks. The business model sounds pretty awesome, but there are some headwinds. For example, a traditional software company like Microsoft could just sell Office to any business of any size. But Palantir can really currently at least only target large caps because of the software as a service factor. The high cost of the custom builds prohibits adoption by smaller companies. Also, this leads to their large, but albeit shrinking, customer concentration. This is improving, but having most of your business be in the US government and the rest spread out to a small amount of companies provides large risk, at least for now until that changes. Part of why they missed their profit target last quarter was a large amount of stock-based compensation. This could be a good sign, as the losses were temporary and mean that the employees are well invested in the company. But if they are diluting shares or those employees decide to dump post-lockup, that could be quite bad for the share price. Lastly, their business model currently requires the embedding of forward-deployed engineers to work with a company to custom build solutions, which is very expensive and time-consuming and leads to very low margins, at least initially for Palantir. Very strong, maybe unsustainable revenue growth is needed to grow earnings enough to justify its current 50 price to sales ratio. Really, that's the biggest complaint. It's very expensive and thus very risky. So before we get into the bull case, let's review a little bit more about the fundamentals and valuation. First off, it's very hard to value this company because of the secrecy and uncertainty. There's uncertainty about what they do and about what the future growth and margins will be. Margins could drastically improve or stay low. Revenue could stay steady, or they could even greatly outperform. They don't really have a PE ratio since they don't have positive earnings yet, so we have to look elsewhere and are currently using a 50 price to sales ratio, which seems astronomical, with Apple being 7 and PayPal being 16 price per sale, for instance. Currently, they have a $53 billion market cap, making them the size of Pinterest and Capital One. Simply Wall Street estimates a fair value of $20, Morningstar gives them a $24 value, and Goldman actually up their guidance to $34. So now that it has dipped to these levels, it has become much safer than when it was a $30, $40 stock. But it still needs strong growth for those prices to be reached again. So speaking of growth, last quarter they had 85% year-over-year revenue growth from their government business and 40% overall growth, which sounds very strong. And it also predicts 45% this quarter and 30% annually over the next 5 years. Again, that sounds very strong. If the valuation remained constant at those levels, you could see a $150 billion market cap company in 5 years, which would make them the size of Starbucks and Boeing. However, it would seem much more likely that the multiple will contract somewhat even with strong growth. Cut that multiple in half, but grow 150% in 5 years, you would still end up with a $50 to $60 stock. Or if the multiple collapses to 15 to 20, and now you have the same price that it is now. So that's where a lot of the risk comes from. We have to hope that this astronomical growth continues so that they can grow into that multiple. So the bull case. Okay, so it's crazy expensive and highly valued. Is there a bull case for it to grow into those prices? The biggest bulls online are either in it for the founder hype or the tech hype. People really believe in Peter Thiel's track record or believe that Karp is some kind of crazy-haired super genius. The ambiguity can also add to its hype potential, as it's easier to overestimate something when you do not understand it. Also, big data has been a growing industry and I think a major part of our future. I think Palantir's low margins will expand. That's mostly a hunch, but currently they are mostly building out for new clients. Those clients have huge stickiness, as once they invest in building out a Palantir Foundry platform, the switching cost will keep them around. Then Palantir should be able to earn higher margins when adding on and servicing the initial technology build out. Also, they should be able to get more and more efficient as they are building more and more for more and more clients, and hopefully lowering the costs as they scale the business. Again, I'm not an engineer, but I have read from a lot of people who are familiar with the product that this technology is indeed fantastic. Again, take that with a grain of salt because I don't use it myself. I think moving from government into big business is actually a huge opportunity for them. If they can increase efficiency in development times, drug development, or production speed, then they're going to be money printers. If the idea that their technology is so great is correct, then I believe they should be able to meet or beat their strong revenue growth expectations. Lastly, their current deal with IBM actually integrates Palantir into IBM's Cloud Pak, which will automatically deploy 25 IBM enterprise salespeople to sell Palantir to IBM's clients. Palantir currently has a very minimal sales staff. This could be huge if IBM is able to start pushing large adoption of Palantir Foundry. Cathie Wood is buying this dip, so should we. Well, looking at the price action, there has been large run-ups in Palantir's price over the past few months, which show the potential of the hype. This lockup dip could be sustained for a while, however, as technically we're in a downtrend, so I would suspect that would keep the pressure on the stock in the short term. Eventually, if this is a good company, there are buyers going to be rushing in on the deals, but also people are going to be afraid to buy initially while we're waiting to see that price stabilize. Definitely want to be careful in catching a falling knife. There was some decent green volume today, but I wouldn't expect an immediate rebound with the huge amount of potential share sales overhanging the stock price. In the meantime, I'm going to see if it settles down and use this volatility as an opportunity to sell puts. I feel safe getting this stock around $20, and hopefully maybe this $25 share price will create a base of support. So my verdict would be a conditional buy with extreme caution. All right, so you're going to need to only buy if you can get a good price on this dip. Buy if you have a medium to long-term time frame that would allow the stock price to recover during this bull run, or an even longer-term horizon, betting that this company will be a huge company in 5 to 10 years. But keep in mind, this is the type of stock that can get hurt very badly when the market's correct because of its sky-high valuation. High risk, possible high reward. We'll see. Let me know in the comments below if you're buying, selling, or waiting to buy, and why. Also, we'd love for you to like the smash button and subscribe for future stock picks, crypto news, and option strategies as well. Again, I'm Joshua. Thanks so much for watching, and we'll see you in the next Milk Money video where we learn how to make our money make more money. Peace!